So for the first time in ages, I can tell you that the interest rate you can get on savings has gone up in some cases. I'll give you more details on that and the best accounts for your money right now in my May 2021 update on the top UK cash savings accounts. This video is something I do every single month. If you want to make sure you don't miss out on all the updates that I do every single month and lots of videos in between about savings and other personal finance things, make sure you do hit that subscribe button and that little notification bell. So as soon as those videos are released, you know about them before everybody else. So like I said, some interesting news in the world of savings. I've been doing these videos for nearly a year now, these monthly updates, and this is the first time I've been able to report an increase in rates. It's still only a small amount. It's not a massive one, and you can still beat these increased rates with some of the other accounts, which we'll get to later on. But we're talking here about 1 year fixes and easy access accounts. The best easy access account is now 0.45%, up from 0.4%. In fact, we only recently saw rates drop from 0.5 down to 0.4. So this is a few banks, building societies, giving you the option for 0.45%. And likewise, we've got a 1 year fix now at 0.7%. Again, we've seen month after month after month of these rates just dropping down, down, down. Again, these aren't as good as what you could have got a few months ago, but it's a weird indication. But potentially, this is a fluke. This is just a few people, a bit of competitiveness at the start of the financial year when people are more likely to be thinking about moving their money around. And maybe they're trying, right, let's give this rate, let's try and do something over here to get their business, to get their money in their accounts. Could be a fluke, could be it, and we could just go back to rates staying as they are or dropping again. Maybe it's an indication that people are more confident, the banks are more confident that we won't see negative interest rates from the Bank of England, which means that potentially there could be a base rate rise at some point. There are loads of things going into play there. I'm not an economist. I can't tell you what I think the Bank of England will do there. But potentially this is some places thinking, okay, we don't need to keep cutting. We can stay put or maybe increase it. So be interested to see how that does play out. I'll obviously give you those updates whenever I have them. The other bit of news to share with you is the latest rate of inflation. As I always try and remind you about this, inflation rate is really important for lots of reasons, but it's important for your savings because you want to try and make sure that at the very minimum that the interest you are getting on your savings is at least higher than the inflation rate. Now, the inflation rate changes month by month. The last year, it's been particularly up and down like a roller coaster, so it's very difficult to kind of sort of, 1 month you're above it, 1 month you're below it. But it's really important to try and do this because the inflation rate basically measures how much more expensive things are going, the things that you are buying, how much more they're costing year on year. And every month that rate comes out based on what it is that month compared to 12 months ago. If your savings rate is less than that, then it's not growing as fast, that money you have in your savings account, and therefore it's losing its value in real terms. Anyway, the previous month figures, when I gave you the update, was 0.4%, which was possible to get easy access accounts on that level. It's now gone up to 0.7%, which makes it, again, a lot harder. For most of the accounts available, your money is going to be earning less than inflation. So really sort of good indicates there, a bit of a kind of a nudge that you might need to try and move that money to somewhere which has the highest paying account, highest paying interest. Now, I did a video which you might have missed, so do check that out. I'll link to it up here and below. I did a video in the last couple of weeks looking at when it is worth moving your money. Is it worth chasing saving rates every time there is a little bit of an increase or a little bit of a cut? And check out that video for more details. But the real sort of basics of it is the smaller that rate change and the lower amount of money you've got. This is all simple stuff, I know, right? But the lower the cut or the change in interest, the lower the amount of money you have in savings, the smaller the difference. In fact, a lot of the time that difference is going to be negligible. So unless the rate is a hefty one, 0.5% cut, 1% cut, something like that, or difference between the rates you can get and what you have. And if you've got, talking about, starting to put thousands of pounds in savings, other than that, you're not really getting much difference. And I would argue potentially it's not worth continuously saving the best rate because the effort you go in to do that just for that rate to drop again and the rate drop again isn't worth it. But if you are someone, and we still know, despite, this might be the first time you're coming to one of these videos, you might be a regular checking these out every month, but we know that a lot of people have their money, their savings earning practically nothing, if not actually zero, in their savings accounts and current accounts, which they've had for years and years and years. The rates have just dropped, paying less than 0.1%, maybe 0.01%. There's not great rates out there if you've just left your money. You do have to have moved it. So in that case, you can move your money. And in a second, I'll take you through those best current account rates out there, the best regular saver rates, the best easy access rates, the best ethical savings accounts, where you might, if you're getting practically zero, you can get as high as 3%. There are restrictions on that, but you can do it. Then it is worth moving your money. The only other thing to tell you about, and I sort of mentioned this before on the current account video update I did last time, but there are a couple of linked savings accounts that you might have with a current account which have dropped their rates. The Santander 123 account, again, won't go into these, I've got a whole video looking at that. But if you have got one of those accounts, the Santander 123, not the Santander 123 Lite, those rates have dropped to 0.3%, plus you're paying a fee. It's a rubbish account for your savings. Do not have that for your savings. But again, check out that extra video I've got with more detail on that. And also the Virgin Money M Plus account, a bit more on that in a second. The linked savings account that you got with that just last week, that dropped from 0.5% to 0.35%. But as I said, it might not be worth moving that money to somewhere else because the amount extra you're going to get could be quite minimal. But again, does depend on how much money you have got. Right, that's it for the update. Let's take you through the best accounts for May 2021. And let's start with the highest paying one. It is still in the regular saving world. It is with NatWest or RBS. They both, if you have a current account with them, and that's a requirement for a lot of these regular savers, current account with either of them or both of them, because you can have this twice, you can get a digital regular saver paying 3.04%. Now you can only put in 50 quid a month, a maximum of 50 quid a month, and the interest is only paid on the first £1,000 you have saved. So once you've saved over £1,000, you don't earn that interest. You get like 0.1% or something ridiculous like that. But you can potentially have two of these, okay? So you can open up, if you've already got a NatWest current account, you've already got an RBS current account, open up two of these regular savers. Now I wouldn't say it's worth opening up these current accounts just to get this, because again, it's not a huge amount of money. 3% of £1,000, 30 quid roughly you'd get over 18 months, something like that. So it's not the best incentive for opening a new account. There are lots of different options you can look at instead. But if you've already got that account, I absolutely would think about doing that. You might want to wait around and see if a switching offer comes around if you are going to open the account, but there haven't been one of those yet this year for NatWest and RBS. The other regular savers, pretty much same as before, no real change there. Coventry Building Society 1.05%, that is a variable rate, so it could change, but that is open to anyone. You don't need a linked current account. If you already have a current account with HSBC, Club Lloyds, First Direct, Nationwide and TSB, they all have 1% regular savers that you could open up. And we'll talk about ethical ones in a minute, but the Ecology Building Society has a regular saver. It's a variable rate at 0.8%. But that might be a good one if you think you want to put your money somewhere ethical. Ecology Building Society, the name kind of says it all. 0.8% is a good one there. So below the regular savers, the next highest rate, beating most of those regular savers, actually are the current accounts, those high-paying current accounts. And again, there's still just two of these. No massive change here. Nationwide, Flex Direct, and the Virgin Money M Plus current account. Flex Direct, as I've said before, don't think you should get it right now because you only get that offer for 1 year the first time you open that account. So I would hold back and wait and see in a year, 2 years time, maybe there's better promotions and you get more money as a result. But the Virgin Money M Plus account, again, I think that's well worth getting it. You get 2.02% on £1,000. It's a nice extra account to have sitting there as a savings account. But what's interesting, what I've discovered in the last month, and I did cover it in that video that I mentioned about best place to put your savings at when you should be moving your savings and stuff, is the fact that you can, if Virgin lets you, have multiple current accounts, multiple M Plus current accounts. You could potentially have, and someone got in touch after I wrote about this saying they've got 13 of these. They've got £1,000 in each of those accounts, earning 2.02%. So they are getting that top rate of interest on £13,000. Now, what Virgin Money said to me when I contacted their press office was that there is no limit to how many of these accounts you can have. It doesn't have to be a mix of personal and joint. You can literally, if you want, have loads of personal, loads of joint, but you can just have them all in one name if you want, your own just for you. But there's no guarantee they will give you the account. They're basically, when you apply for an extra account, they will assess you every application on why you want this. So there's a chance they might say, no, we're not going to give you a second account, a third account, a fourth account, how many you might want. Now, the big risk of doing this, obviously, is if you think, right, I'm going to just open up loads of these accounts to get this top rate of interest on all my savings, because you will not be able to beat this on your savings, is that rate is variable. Okay, so they could drop it at any time. They could go tomorrow, yeah, we're dropping that to nothing. And suddenly you put all that effort into opening 13 different current accounts and they're all pretty much redundant. Obviously, every time you apply for a new current account, it will have an impact on your credit score. Not a huge one, but it will have an impact. So if you're opening lots of them, that's obviously have a larger impact, and that potentially could have knock-on effects if you are going to go for something like a mortgage, or you're really important you get a balance transfer credit card or any of those things. So do obviously sort of think twice about it. Actually, just while I'm saying that, if you're thinking of getting a new current account for your savings, but you've got credit card debts, then don't. Use your savings, existing savings, to clear your credit card debts. That's much more important than getting the best interest rate. But right, that's a little tangent. Let's go back. So they're the two current accounts there, but Virgin Money, absolutely well worth thinking about it. There is a switching bonus you can get as well if you move your existing bank or a bank into Virgin Money. You get some bottles of wine and a charity donation. More details on that over on my bank update, which is worth checking out as well. I do that every month also. So beyond that, we're getting into some other areas. Now there's the Chip Plus One is the next best account. Again, a whole new video on that released last month. That takes you through exactly how this works. I did a video last December, but this was an update that I did because they changed things. As I said in the video last week, you can get that 1.25% on savings up to £10,000. Now there was a promo that was running in April that has now finished. Unfortunately, these things might come back. If they do, I will update you obviously on the blog and social media, so you can sort of make sure you keep an eye on that stuff. But at the moment, if you get the VIP code, I've got one that I can link to below. You can open this account and you can get, say, up to 1.25%, but you have to factor in a monthly fee, actually a fee every 4 weeks, every 28 days. And that knocks down the rate. So if you had the full £10,000 in there, you're looking at 1.06% roughly after the fee. If you have anything less than that, obviously that drops down and starts to become slightly still competitive compared to the other easy access accounts, which we'll get to in a minute, but a long way off that 1.25%. But again, all those details, check out that video, but it's definitely one to think about if you don't want to go through the faff of lots of Virgin Money M Plus accounts. Let's take you through the fixed savings accounts. I mentioned before that suddenly has jumped up again after months and months and months of that dropping. Still not fantastic, but UK with Atom Bank, you can get 0.7% fixed for 1 year. That's a minimum of 50 quid that can go into that account. The notice accounts, this is where you put your money in, but to get it out, you have to give a certain amount of time. So the rate there is not locked away for as long as you would with a 1 year fix or 2 year fix or whatever it might be. But the rates can change. But if they do that, you're able to take your money out early. Anyway, money box are the two ones to consider here. You get 95-day notice period, 0.5%, or 45-day notice period, 0.45%. So they're not bad to consider if you've got some emergency cash available to you one place. This could lock it away for a little bit of time. If you need it, you've got time to get it. But again, you can beat these rates on those other accounts. So it's worth considering if they're better options. Now, easy access. Again, this is one that has suddenly just jumped up a little bit. Not a huge amount, but Kent Reliance is offering 0.45%. The minimum of £1,000 you can put into that. You can open that one up online or in branch or post or things like that. Next up, Paragon, 0.41%. Next, Marcus, 0.4%. Then next is Tandem, 0.4%. And this is a green easy access account. Haven't got all the details on this one. You have to sort of register on the app and stuff to actually open this account because it's an app only one. But again, could be a good ethical option for you. And again, I wouldn't say the rate is that different, making that worth you moving your money if you've been in an account that's recently dropped, such as that Virgin Money connected account. That's it really, they're the main ones. Let's sort of go over the kids ones again. There's not a huge amount of change there on kids savings. Halifax Kids Monthly Saver, 3.5% still. The HSBC My Savings account pays 2.5% on up to £3,000. And the Junior ISA is 2.5% on those from Bath Building Society or Darlington Building Society. Premium bonds, still a really good option to consider right now with rates not being as good as they were. Chip Plus One probably will beat it based on your likely sort of chance of winning a premium bonds, that kind of 1.25%, the more money you have in there. But you might think, actually, it's a bit of fun, see what's going on. The next draw, as I'm recording this, they haven't done the May draw yet. So we'll see if I win again. I won in my second month last month, didn't win in my first month. Let's see what happens going forward. But I'm quite keen to sort of keep my money there as an experiment and just see what happens. And let's just end quickly on ethical building society and bank accounts for your savings. The top paying one is that Nationwide Flex Direct account, 2.2% on the first grand and a half. Again, I mentioned that's maybe better waiting for that, but if ethical money is your priority and the highest rate is your priority, you cannot beat that. Ecology Building Society, which I mentioned, regular saver 0.8%. There is a Sharia compliant account, Al Rayyan Bank, 1 year fix at 0.55%. And then that Tandem Green Instant Access Saver at 0.4%. They're all good ones to consider if you want to make sure that your money is being used for good things, proactively being used in some cases for environmental causes, but also just by the nature of the building society world or the kind of Sharia compliant bank world, not being used for some of the things that you might actively disagree with ethically. There you go. That's my quick rundown. Hopefully you've got lots of useful information to help you get the best rate for your money. I do an update on the blog, which is every time there's a big update, I would do that. That article, I'll link to it up here, so make sure you click through. Love to know what you think of the current savings rate. Do you think that this little extras that we've seen this month will mean we see more rates coming up and up and up, or are we like just be a bit of a blip and things will carry on as they are or keep dipping down? Let me know in the comments below. My name's Andy Webb. Thank you so much for watching. Until next time, cheers. And here are a couple more videos you might find interesting.